In this video, learn how to use market breadth to find trade opportunities. Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade and the Playbook. Let's get to work on sharing how a firm trader used market breadth to spot his next winning trade with a neglected stock in the strongest market sector.
Hello everyone, my name is Dhruv Bias and I'll be presenting on Qualcomm. This is a breakout trade that I took on the 7th of December. So here are the factors that made this trade an A trade in my book. So the main important stuff was that it was in the strongest sector. So this was the top 2% strongest name in the market, and it also happened to be in...
Dude, how are you doing that? How are you determining it was in the strongest sector?
So the way I do that is by looking at all the ETFs, different kinds of ETFs, and SMH was the strongest ETF at the time. In the market, we had gone through a...
Are you doing that by day, or are you doing that by month? Are you doing that by week? Are you doing that by quarter?
Yeah, I do that by day. So we had gone through a pullback in the SPYs and the Qs, and SMH was holding the most relative strength. So it happened to be stronger than the other ETFs as well. So that's why I felt that this was the strongest sector in the market at the time.
All right, and are you using any platforms to determine what was the strongest sector? Are you doing that yourself, doing that independently? How are you figuring that out?
The most basic thing is just looking at the ETFs. And SMH is the ETF for semiconductors. And the other stuff is every day. So I have a scan which I run to see the average ATR move inside of a sector, inside of an industry. And I had been running that for multiple days. And every single day I would see, oh, SMH is always having the highest average ATR move compared to all of the other sectors that are out there. And this was just through days and days of doing it, that inside my head, I know that this is the strongest sector. It's continuously it's been in the top for so many days, where it has the highest average ATR move across the sector, for the past 1 month. And it was holding that move. So it hadn't pulled back as much as the SPY. So that's why I felt that this was the strongest sector at the time.
Okay, very good. Thank you.
After that, this stock also was the top 2% name in terms of how much percent move it's had in the past 1 month. And it was holding very nicely, that move. The stock had high relative strength, again, because we had a big pullback in the SPYs and the Qs, but the stock was holding up very nicely. And the other very important thing was there was a strong pickup in breadth. So previously the breadth numbers were very weak. And the way that I look at breadth is the number of breakdowns and breakouts in stocks. So if there's a lot of buying happening, usually we see a lot of like 4% moves in stocks happening. And the ratio of those moves is, usually like 5 to 1, 3 to 1, something like that, where we have like 3 times or 4 times as many 4% moves higher compared to 4% moves lower. And the day before the gap up, we had actually seen a very sharp pickup in breadth. So that's another important...
You're doing that across all of the stocks?
All of the stocks, yes. That's across all stocks.
How many stocks are up? How many stocks are down? How much are stocks up? How much are stocks down?
Yeah. The number of stocks that are up, that closed 4% higher than they started on the day. So that's the breadth ratio. And then some extra stuff that made it even better was the fact that we had very high R-ball on the earnings day. We had some decent surprise on the earnings. The important factor was that there was good neglect prior to earnings. So prior to earnings, the stock wasn't already up 100, 200%. It was sort of neglected. Like, institutions weren't really after it. It wasn't really run up. It wasn't near all-time highs or anything like that. So now people, when it pulls back, the institutions are interested in buying it. And another thing was also, this is something that I look for in like my good breakout setups, is that the 10 and 20 SMA have caught up to the stock. It's not floating in thin air. It's had a little bit of time to consolidate.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So here's just basic statistics numbers on the stock. The day 1 hour ball on the earnings day was 7 times. The ATR of the stock, this is useful for intraday profit taking, was about 5.73. I've noticed that for me on good breakout setups, it has to be above 1 for it to be really profitable. The float on this is 1.1 billion, so that means it's not gonna, when I'm looking at tape and how to take this setup in the morning, it's not, I have to set my expectations correctly, that it's not gonna fly off the open. It's gonna be slowly, we'll see bid stepping up, and then it moving higher. It's not gonna, it's not gonna skip prices as something like a, Melly or KLAC or whatever. The other important thing was that there was a recent move of 40%. That's basically what put it in the top 2% strongest names in the market. And the breadth numbers from the previous day had improved significantly. So the breadth numbers were 449 breakouts to 153 breakdowns, and previously it was like 50 breakouts to 700 breakdowns. So there was a very quick shift in the breadth from the previous day. So here's the SMH daily chart, and the pin, the hammer candle that's inside that rectangle is the pullback day in the market. And you can see that a candle like this is usually a sign of strength, that it's not able to close that much lower, that people are interested in buying dips into names that are inside the SMH sector, or SMH ETF and the semis. So we can also see here that the pullback here is much deeper compared to the SMH, because we can see that the SPYs, it comes all the way back to the 50-day, which is the yellow line, versus in the semis, we were nowhere close to the 50-day. So here's the chart for Qualcomm, and we can see it had a move off earnings, pulled back, broke out, and then now it's pulled back again and is poised for another breakout to happen. So here's a closer look at it. The 10 and 20 are the blue and red lines, so they started to converge a little bit, and the day that I bought this is when it gaps up over the 10-day, and it basically opens right at the 10-day. And what I'm looking here is that the technical setup. So I like to go from the top down. So the top is the markets looks like it's picking up. The second thing is if the market is indeed picking up and we're gonna see perhaps a rally, and into the end of the year, I want to be in the strongest sector, and within the strongest sector, I want to be in the strongest name. Within the strongest name, within the sector itself, I also want to look at names which have the best breakout setups, and this one seemed to be having contraction in range. So over the past few days, it had really been getting tighter and tighter, and it was also opening up above where the lower high should have been. So it was opening over the inflection that I usually look for on these setups. So the strategy, the way I was looking to execute this was as a swing position trade, because I was trading on a joint account as well, and that's where I want to take more of the tape trades, the momentum trades, and off to the side, this was going to be a swing position trade. The criteria for this was very simple. The stock was opening over inflection. And it was opening over a moving average, the 10-day moving average, which sometimes is resistance. So I really don't have any much overhead resistance until the all-time highs, and the method was going to be opening drive. The exit criteria for this is the stop is very simple. It's going to be the low of the day at the point at as of the time when I take the trade, and once I hit my first profit target, I'm going to bring the stop up to the break-even price. And in terms of profit taking, I was very much bullish on this name because of the fact that it's the strongest name, strongest sector. So I was going to take profits based off of measured move off the previous move that it had made, and not really, and not get much of my size off before that kind of a move happens.
Dhruv, who are you doing this joint account with?
So this is the joint with Brian Dillon and Team Swing.
How are you guys coming up with the decision as to whether or not to take this trade?
So the way we do it is a lot of the market breadth, planning, all that stuff we do together. And then if we have multiple different names, we're going to walk through permutations pre-market, and then we're going to sort of assign the names to the executing traders that are on that joint account. So, for me, it's going to be less risk, and for the other two traders, Brian and Dylan, they're going to be taking the bigger setups. And so we talked through a lot of how we're going to act, the different permutations, and what all I need to look for in order to add size, take off size, all those sort of things. The plan in the morning that day, that's when I see the market breadth and everything. So I had realized that the breadth and the gap in the market makes it seem like we're ready for a go day. The entry for this, I was looking to enter half at open.
Do you have some sort of indicator in your head as to what you want to see with market breadth? Is there some median point that needs to be surpassed for you to say, hey, we do have the market breadth?
Yeah, so basically it should at least be 2-to-1, where we have twice as many breakouts happening versus breakdowns, and the ratio between that. And so I also run like a 5-day average ratio, and that should also be above a certain number for me to be interested in taking longs in the market, breakout setups in the market. In terms of entry, since this could just be like a gap and fade, I didn't want to take full size off open. So I wanted to take half lot off open, and then half lot if the Qs hold the gap nicely. And we also haven't moved away too much from opening price. So here's the 5-minute chart on Qualcomm. You can see that the moment we gap up, it really does not come back. It offers a small pull, and then after that it goes higher and higher. Here's the 2-minute chart. So it's on this name, it's totally possible to take this both as a swing and as a momentum trade. And the ideal executions here would have been to get long versus the low of the day when you see bids stepping up, and then take off a decent chunk, like 2/3 of the momentum lot of the whole thing, which is going to be the momentum lot, into 180/50s, into basically 45%, 50% ATR, and then hold low of day for the rest of the trade. And this is how I ended up executing it. So I took off. This was only as a swing trade. I wasn't able to get the momentum lots in, so I covered risk. I covered about 10% of the risk around midday on day one, and the next day it pulled back, and the day after that we had a large push, so I wanted to get some off into that. And again, by this time it started to look like the breadth is actually not holding up. So even though we didn't break down in the market, we didn't see that buying coming in like it should have. So at this point I was thinking it's probably a good idea to take off into like a gap and push. But the main reason why I ended up flattening the position on the last day is because something one of my mentors actually mentioned from the team is when you have a weakness in the market, when you have weak breadth, when you have when the market isn't moving higher as it should, something like this where it gaps up and pushes, what is this, like 8 points, that's a gift from God. Like, you should just take that and move on, and live to fight another day, type of thing. And that's basically what happened, where the breadth was weak. We didn't see semis really moving. Like, SMH wasn't really moving alongside Qualcomm. This was just a singular stock that was moving on its own, and that's why I chose to end up flatting it on that day. And this ended up being about a 8 to 10 hour trade for me.
Maybe I'm not being able to pick this up. So when are you buying it? Where are you buying it?
I picked it up at 179, 179.30s, 179.50s on day one, on the 7th.
On the 7th.
Yeah. Let me see if so
Okay.
around here.
So you're buying there. Okay, I got it.
Yeah. And then taking off about 10% into this, getting down to half size into this, and then flattening the position somewhere around here.
So did you just buy it right on the open?
No, so basically off the open, what it does is it pulls back 50 cents. It holds for about 10 seconds, and then it starts stepping up higher and higher. And I get my initial lot into the initial step up, and then once it confirms, volume comes in, I get in full size.
After it holds up.
Yeah.
You bought 179, half of it?
Yeah, so I think around 179, I buy half of it, and then it pushes higher, another 20 cents, 30 cents, I get full size.
And your stop is below 176?
Low of the day, so it's like 178.50s, something like that.
Okay.
Yeah.
And then you sell it where?
I sell about 10% into this move here, into like 184-ish, and then get down to half size around 185, and then sell the rest around 188, 189. This was all-time high. And given the fact that nothing else was really moving like this, I thought it was a good idea to just get flat into the name.
All right, got it.
So see market opens. See it open at 179, pulls back to 50. So this would be ideal executions. If I take it off the tape, it should be, if this steps up to about 60 cents, so it's holding for about 5-10 seconds here. If it steps up to 60 cents, I'll like to get in an anticipatory size of about quarter to a third long, and then 179 should be full size there. And at this point, what I'm looking for is if there's any fast stuff of 30-40 cents where it just drops, where the seller is just stepping down about 40 cents, that is a bad sign. So that's where I want to get down to just a third size and then hold that versus low of day. But nothing of this sort seems to be happening. So we just see a steady step up, and this is what I can expect on a stock which has $1 billion in float. It's not gonna fly up. And let's see. Yeah, so it basically does this action where it just continues to step up more and more, and then the pullback that it does have. So that's where the make or break part of the trade happens, when we see a pullback in the name. So about 50% ATR. This is on a momentum lot. That's a profit-taking spot for at least a quarter to a third of the position. And at this point, I'm really looking for any kind of stuff move. If there's a large stuff move that happens, that's a sign to get down to say half size. But any kind of, but if it just fades off on low volume, that's really no sign to be troubled, because this is at the end of the day going to be a swing trade. So we just see this as a shallow volume pullback without any sort of aggressive selling. And since you've already gotten out a third of your entire position, that's holding throughout this should not be any issue. Yep.
So, I mean, if you really like this position, it's something to think about, particularly as it pulls back into pretty close to where you initially bought it.
Right.
Yeah, so you can see on the tape, it had a little bit of a fight there at 180, and the sellers won, and then it pulled back into 179.25-ish, which is a little bit further than you would have liked. But if you really like the position and pulls in that much, and you can see it stop going down, you can put back on some risk against that 178.50 when it starts to go back up from the low 179s. If you see that, so yeah, I don't love that it pulled back from 180, but now it's pulling into pretty attractive prices. And again, if you really like this trade, and you can see it start to tick back up, or turn, as we say, turn back up to the upside, yeah, a momentum trader, even a swing trader, will use that as entry. I mean, it's one of the big advantages of using the tape, is to be able to see something like that, to use the tape as a way to enter, even if you're making a swing position. So that's what I'd be looking for as we're pulling into that 179 area. Is, let me see the turn, let me see it stop going down. Can it not push below a certain price? Does the pattern change as to what it looked like when it was going down? Can bids start to step up and start to hold higher? And maybe I'll put on a little bit more risk. I would probably put on more risk if I saw that. So let's see what happens if you have that.
I think that makes a lot of sense, because I wanted to, like I mentioned earlier, I wanted to get in more size into this.
Well, let's talk about that. Let's talk about that just logically.
Right.
So if I'm going to hold a certain portion of it from the high of the open into sort of where it opened, close to where it opened, I'm going to hold that part,
right,
and I'm going to let that run. When it pulls back into near that level,
yeah,
near where you're going to get stopped out, and it turns, I just think logically you have to put more risk back on. It actually doesn't make any sense to have held it,
right,
to see it hold, and then not to put more risk back on. All right, and it looks like I remember that 180. On that 180 on the way down, it was a little bit of a fight, and let's see what happens. Yeah, I mean, this is an area of contention here, this 180.
Yep.
It was an area of contention on the way down, and it's an area of contention on the way back up. Yeah, I mean, from the tape, that's your inflection point.
Right.
Who wins here is going to win for the open, unless there's an intervening force. And you want to be thinking like, who's on the other side of the trade? I mean, people are going to be shorting from here. People are going to be saying, look, I saw the 180 as resistance. And if I think this is going to find a way to trade lower today, this is a good place to do it from. This 180 area, that's where it couldn't hold on the way down.
Right.
So you're going to have some people, you're going to have a bunch of people short, and you got a lot of people watching the long side. That 179.25-ish area too. I think it really got above 180.15-ish, that last up move. And this is different.
Yep. It's moving a little faster.
It was different there when it got above that 15 cents. I mean, I'm looking at that. All right, that's where they did a lot of volume on the way down, around that 180. Went down. Now it came back up to that area. It was a lot more volume done there as well. Where's VWAP at the time?
I don't think it's on this chart here.
Well, I mean, this is the area, right? This 180, it wants to pick a winner around this 180.
Yep, it didn't sell off as much this time when it pulled back.
Yeah, I mean, I'm thinking here, hey, does it need to get below 180 and not go down? Is that a catalyst that might have it go back up, just in terms of reading the tape? Do I need to see that? Do I need to see it get above, 180.30 and hold? Is that going to be what makes it go higher? I'm starting to think through the different ways it might trade.
You're thinking of some kind of like change in character.
Yeah, I mean, they're doing the volume at 180. That's where they've decided right now in time where we can do a lot of buying and selling. And the last time it got up here, it didn't hold above that 180.30, and now it went up higher here than it did that last time it got above 180. And you would think that the people short are offside. You'd think that the buyers see that it's a little bit stronger. That I don't want to see this really get too much below that 180.25 area now. I'd want to see it hold higher. And if I really love the long, I might think about whether that's going to hold or not. And it's an expensive stock, so you got to think about an area as opposed to holding right on a price. But it should kind of hold that 180.25-ish area. It should hold higher than that 180-ish area. It shouldn't have to necessarily go back and retest that. We might, but it's really strong. It should hold higher. Yeah, I mean, so it did hold higher. So it did hold a little bit higher than it did last time. I mean, if I'm watching that tape in real time, I'm saying to myself, you know, you guys can sell this higher. You're being a bit stubborn here. Momentum's to the upside. You can go sell, you know, get out of the way and go sell this higher. You know, again, I'm saying to myself, if it pulls in, I don't really want to see this get much below 180.50. You know, that'd be great if I can kind of see it hold there. I'm thinking through that. It's a bit heavy into that up move. I was surprised by, you know, just from the tape standpoint, I thought they were going to let that go a little bit more than they did. You know, it did get up to 181. That's better. But you would have thought that would have ripped through that one. I would have thought it got through at least 180, 181 a little bit, and to tip its hand as to how strong it would be. You know, again, it's an area. I just like to pull back to 180. We thought we want to see it pull back to 180.25. I want to see it pull back to 180.50. It has an area. It's $100 stock.
Yeah.
$108 stock. So it's not going to be, you know, like a $20 or $30 stock.
The spread itself is 8 to 10 cents sometimes.
But this is, you know, it's pulling. This is where they should be doing the fight. They're doing the fight where they should be doing the fight. And it is a battle. Like, people think this is going to go down. People think this is going to go up. In a really strong market with a really strong sector, there's somebody that wanted to sell that there. That's a bit more aggressive on the sell side than you would normally think in a strong stock, which to me means, hey, if those guys are wrong, this thing should rip through 181. And if I'm long this, I'm thinking it's a little bit weaker than I had expected from the tape. You know, what should I be thinking here? Am I wrong? Does it need to pull back into 180? You know, I'd be thinking through that. I'm looking at VWAP, does it have to, is it just because it's too far away from VWAP at this time? Do we have to, go settle somewhere?
Gotcha. So if you added on like that dip, you might be thinking, if I'm full size, maybe it's not looking as strong as I thought it would be. So you'd consider like sizing down a little bit.
It's still fine. If you look at the chart, it's still pulling into, that support area. It's not optimal that it's doing this, but you're not wrong yet. And I'm thinking right here, like this is where people can really get off sides, because it went down further than it did the time before. Last time it pulled into 185 of 180.50. Now it's pulling into 180. You're going to get some momentum traders shorting it now.
Okay.
And if that doesn't work, they're going to be completely off sides. Because the very, very short-term 1 minute and 2 minute chart momentum is to the downside when it makes a low below that 180.50, and it is right on the open. So momentum rules right on the open. So those people can get offside and really rip their heads off. If you're swing trading that, you want to be seeing that and saying, hey, I could get a big rip here to the upside. These people are they're too aggressive. All right, I don't want to make this about a tape reading session exclusively. So what happens?
It ends up breaking out of that and going higher.
On the day.
So I think if it got above 181, it'd be a pretty nice up move, I would think.
Yep. And it ends up trending the whole day.
Yeah, when it got up to that 181, it goes up $1.50. All right.
About
Then
that.
it pulls into 182. Brilliant. Yeah. I mean, it looks like there's a fight every point. Good use of the tape. I appreciate you putting that up on there. I think particularly for the newer guys, getting your tape reading skills down and overlaying them to a setup, particularly for entry, is super good. And I'm okay. I said this the other day to somebody. I'm okay with you guys trading in and out when you're starting, because I think that builds skills, even if you're going to be a trader that doesn't use the tape as much as other people. But even for people who come up with swing ideas, overlaying the tape, using that for entry and exit, super important, will make your ROI much better, will make your consistency much better, will enable you to sort of pinpoint where to be aggressive much better than other people. You really don't want to be a trader that just comes in and says, I think QCOM's going to go up because it's really strong and it's in a really strong sector and the technicals may make it go up. If you can overlay that tape for entry and exit to your thesis, you will be a much better trader. And in fact, one of the things that separates traders at SMB from other places that makes them better than other traders, not only with overall P&L, but efficiency, is an ability to do that. And so I know you're a quantitative guy and I know you're an idea guy. And so you may not end up being a scalper or momentum trader, but I'd encourage you to think about building tools and getting better at understanding order flow, because it will really make you a much more efficient trader. And efficient traders can trade bigger, and efficient traders can trade more consistently, and efficient traders can trade with more confidence. And right now in the marketplace, things are getting a little bit more difficult. We had a period where the market did nothing but pull in and go back up higher. And now with the Fed getting ready to announce any second now, actually we should probably go sit down and trade now. The market could get choppier and more difficult. And when that happens, your order flow skills are even more important. I appreciate you putting this together, Drew, and we'll talk to you guys soon. Hey, go ahead and click our subscribe button so you don't miss any of the videos they're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.